Good news for India's taxpayers. The Central Board of Direct Taxes has released tax return forms for the financial year FY23, which is well in advance this year. The move is expected to help taxpayers be well prepared for reporting requirements on their tax returns. Moreover, the forms have also been amended to include additional questions relating to the selection of the new regime, which will enable the Income Tax Department to know whether you opted in or out of the new tax regime in the past. To decode this further, BTTV's Sakshi Batra spoke to Aarti Raute of Deloitte India. Listen.
These forms have been notified earlier than expected. So what will this result in? Will it result in a smooth process of tax filing? Will it result in more time to the taxpayers and, timely fashion that they can file their ITRs?
Yes, of course. I think it is going to be a good thing if the taxpayers who have a substantial amount of income really go through the forms and look at the details. And we will talk about what are the changes in these forms in a moment now. But definitely making sure that things are there in place before the tax filing season starts, or even before the financial year starts, makes it really very nice for the taxpayer that everything is in place. We had a couple of years where there were a lot of glitches on account of the new portal being, coming in place right in June when it was a tax filing season for the salaried taxpayer, and it created a lot of issues. And then the return filing due date kept on extending. Sure. So I think this year the government has come, CBDT has come out with the forms quite in advance.
Sure. Are there any major changes to the ITR 1 specifically, the Sahaj form, which is the most commonly used by salaried taxpayers out there?
The ITR 1 is a form which is specifically filed by individuals who are residents. So if you are a resident but not ordinary resident, or you are a non-resident, you can't really file this ITR form. So also, there are some other conditions like, for example, your income cannot be exceeding 50 lakhs. You should have only one house property. Or if you have brought forward losses or income from capital gains, then you will have to use ITR 2. So ITR 1 is used by only people who have salaried income from other sources, and only one house property, and who are residents in India. And for these people, there has not been too much of change. The only probably a very subtle change which is there is you have your filings that are required in case of search and seizure processes. And at that point of time, the tax authorities can ask the persons to file a tax return. And there was not the earlier ITR forms did not provide for this kind of a concession, and hence now it has been enabled here. So that is one change. Okay. There is another smaller change saying that there is a criteria to for people who really mandatorily need to file a tax return. And one of the criteria over there is if you're depositing more than 1 crore in cash in a current account. But this has been taken out, and I guess the reason could be probably that salaried people may not be able to open a current account. So this is not really a criteria which is applicable to them. And if you have business income, then you anyway can't use this form.
Okay. If you could just sum up for all our viewers right there, the top 3 takeaways from these new notified norms, and what all investors, viewers in general need to now remember when they approach their ITR filing. In terms of the new ITR forms, the CBDT has been nice enough to provide you all the details. So please go before filing, look at which form applies to you basis your sources of income, and make sure you're checking out the right forms. There are very few changes from last year which are now going to be applicable, at least for the salary class. The biggest is, of course, for the VDA transfers, the virtual digital asset transfer. So those are the details that you should keep handy. it is always recommended that you make sure that you collate all the details of your income in time, because a lot of times what happens is people start filing their returns, collect a lot of documentation, and halfway through they realize, oh, but they do not have certain TDS details or certain income details are missing. In those cases, they will have to go back to those providers and get those details. So make sure that you have a checklist where you're checking out whether you have the details in place or not before starting off to file the tax return. And one of the things which is really recommended is to make sure, see, we have a paperless return. So you're not really filing any documents with the return as such. But
Correct.
what you need to do is to archive all the basic documents, all the base documents with you to make sure that if in case you have an audit at a later stage, you are able to produce these details in a timely manner without asking for any adjustments, and there is, I mean, you're able to substantiate what you have filed in your tax returns.
All
Also,
right. Yeah. Yeah, please continue.
Just one last thing. The government has provided you or enabled the data for the investments, the sales, the transfers, the assets that you've procured in the annual information statement that is provided to you. So please make sure that you're looking at the annual information statement as well as your 26 years, because those are information which are available with the tax department. So any mismatch over there, that's the primary thing which will come. So